Give us your thoughts on the BOJ. 50-50 we were hearing yesterday as to whether they go next week or they go go later in the year in terms of changing course, finally, for the first time since the late 2000s, on policy. What do you expect, Paul?
Yeah, morning, Anna. And I hope that the rocket that Guy was showing isn't a metaphor for what happens to the Japanese economy after liftoff. But the market is certainly expecting a move March or April. I kind of think whether it's one or the other doesn't really matter a huge amount. It's already priced in now. We're pretty certain we're going to see liftoff. We're pretty certain that the wage growth data that's coming through is strong enough that the Bank of Japan is going to be convinced that it can move. What I think people are really paying attention to is what sort of signals we get after that on the future path of interest rates. Are we going to see some more hikes? Can they get off the ground and into positive territory in a stronger way? That might give the yen extra support and might weigh on bonds more. If we don't get that kind of a signal, then maybe, markets will be able to weather the storm and just carry on without showing too many fireworks.
Okay, nice reference to the earlier rocket pictures we were showing. So if they get off the ground and hover, that's different. So if they get off the ground and can keep on climbing, of course, when it comes to the rate story. Thinking about where rates head in the United States, Paul, we had the CPI data out yesterday. Some pretty weird trading around stocks, it would seem, as a result of that. Strong numbers, and yet stocks go higher. Can stocks continue to ignore the upside risks to inflation and the risk that we don't get that many rate cuts this year from the Fed?
Yeah, well, the risk is there, isn't it, for everyone in plain sight? And yet it's clear the markets aren't paying that much attention. We're enjoying this momentum. We're enjoying the bets on the economy, the productivity growth from AI. And there's plenty of cash still on the sidelines. Look at those money market funds with so much money that's yet to be deployed as well. So from that perspective, there's plenty of time for the markets to continue to be still irrationally exuberant, if you pardon the phrase, or maybe, it's logical conclusion when there's still so much cash sloshing around, and it doesn't feel like Fed interest rates are particularly restrictive either. So that's the scenario that we face. We'll hear some more from the Fed in a couple of a week's time, and that may give us more of an idea about whether the market can withstand where we are with interest rates.
Yes.